Hey, thanks, Scott.
Yeah.
Hi, Jamie. How you doing, buddy?
Andy, I am doing well. It is Thursday.
Yeah, it is Thursday. It is that, and we
The
wanted.
reason I
Go
say
ahead.
that, it seems like the week just kind of went poof. It
Well,
seems like it was
yeah.
Monday just yesterday.
Well, it does that every week for me, man. But but anyway, hello traders out there, and thank you so much for taking your time today to come join us in this webinar, and we're excited to bring you some cool stuff today, and we'll jump right into it as soon as we take care of some of the legal issues we got to take care of before we do something like this. Just to let you guys know, we are content publishers. Okay, this webinar is for educational purposes only, and nothing that you see or hear should be construed as investment advice. If that is what you're seeking, I would seek out a registered broker or an RIA, somebody who is actually licensed to give you that advice. I think that's probably good enough for him, Jamie.
I believe it is.
Okay, thank you. Guys, just to remind everybody, once again, I apologize to you guys who are in there every week, and we do appreciate you attending this every week, and I hope you get a lot of I know you get some good information, but we do have to, for the new people in here, we want to tell them a little bit more about what Trade Ideas is all about, and it's much more than just a software. We really pride ourselves on our support, our education, and our continued training. It doesn't stop once you get the software like a lot of companies will do. We are constantly wanting to help you improve as a trader, and we do that by first off offering you a trading room that is live for 7 hours a day, moderated by Barry. He does a great job in there. He's a professional trader, trades out of his own account, and you get to sit there and watch his screen. He calls out his trades. But more importantly, you get to see how he uses the alerts and the scans from Trade Ideas, to profit in the marketplace, and that's the most important thing. And there's no better way to learn than looking over the shoulder of a professional trader, and you get that in our daily trading room. And then we have 4 webinars throughout the week. They are all in the 5 o'clock Eastern time slot now. Monday through Thursday, so that makes it easy for everybody to remember. You got Jamie and Steve on Monday, Steve with myself on Tuesday, you got the Dan and Brad show on Wednesday, and then of course now you got me and Jamie. So and we're pretty steady with this. We never miss a week unless we have maybe a guest speaker or something like that. So it's continued education, and you would think that would be enough, but we don't think it is enough. So on top of all that, when you subscribe to Trade Ideas, you get what's called a one-on-one hour of power training for free. Guys, this is a $99 value, and once you subscribe, we offer to it for free, and it's either with me, Jamie, or Steve, and you get with tons of years, not only professionally trading, but also using the software. We were all one of the first ones to use the software, so it's a very, very valuable hour. And for some of those in here who are kicking the tires, I want you to consider this, because once again, I don't feel intimidated by it, because sometimes the software can seem overwhelming, but it's amazing the people that come through this hour of power training, how energized they are, to see, hey man, you can harness this, and you can put together some good alerts and a layout, and we'll help you do all that. So just want to let you guys know, you are not alone, and we will continue to help and support you with Trade Ideas. All right, let's go over the agenda, guys, for now. Today, we always go through over the market recap. Maybe a little digestion going on here after the big move up we've had in the market. Some people might think it's a little more than would be expected, but we'll get into that. We'll talk about the kind of quiet holiday today, which I thought was kind of refreshing. And then we're going to revisit Turbo Breaks Up SPY 50. Jamie introduced this a couple of weeks ago, I believe, wasn't it? Isn't that right, Jamie? Wasn't it about 2 weeks ago? maybe that you introduce this? Well, he's probably off.
No, hey,
No, okay.
sorry, I forgot I got to unmute myself.
Okay.
Um, but as I said earlier, I'm in a bit of a time warp. I'm like, it was just Monday, now it's Friday. I
No.
want to say it was last office hours, last Monday.
Oh, oh, really?
That and the one before.
I think it was the one
Um,
before that. Okay.
right,
Okay.
right, right. But we'll get into that in a little bit more detail. But there's some really cool stuff coming out of that little guy today, and just about every session there's some really interesting stuff
Yep.
happening with that guy. So we'll get into more detail about that later.
Yeah, it's kind of an exciting alert. We're kind of a lot of people get caught up in the alpha, and usually where you find alpha or the more volatile, more thin, I should say, thin stocks. That it's usually not the American Airlines, the Love, Exxons, and things like that. But with his alerts, I think he's going to show you tonight. Yeah, you can find some movement in some of these bigger cap stocks, and it's kind of interesting. And then I'm going to talk about a new swing scan. I say swing. I use that term, but I try to stay away from all the trading terms and kind of like just call everything a position trade. But because I think really one should focus on more on taking position trades versus calling it a swing, because you may think it's a swing, but there's so many variables in the marketplace of how long you're going to stay in a trade. What's the market doing? What's the peers doing? What's this doing? So you position yourself in a trade, and then you manage that trade throughout the process. And what might be a swing when you enter may only turn out being a 3-hour trade, may turn out being a day trade. What you might think is a really good day trade when you enter it could be a crappy day trade, but be an incredible 2 or 3 day hold. So you'll see me a lot using the term position, because I think it's what it's all about. Let's not kid ourselves. The most important part of the trade is the entry. Okay, and what you do from there is just manage the trade after that. So you want to position yourself in each entry, for a very good risk reward, outcome. All right. And I put a little comment in there using price alerts, because what I'm going to show you tonight, I think people need to start using price alerts more often. And hopefully you have premium. If you don't, maybe your trading software has alerts on them. But it's amazing. I kind of learned that people always feel like they need to take the trade when they see it, and I think people would really it would really be helpful to yourself if you would. Almost, and sometimes I tell people do this for every trade. When you first see a trade, come across an alert. Instead of taking it, use a price alert. Either on a pullback, where you would buy it on a pullback, or maybe even where you would buy it on a more of a breakout. But because I think a lot of people buy stocks in kind of no man's land, I call, So I'd like to use use alerts. And not only that, it will cut down on your trades, and you'll tend to focus more on the better trades. All right, so let's get into the. I didn't mean to do that. Let me backspace here, and let me exit, minimize. There you go. Let's talk about the spiders here. Pull up my daily chart. And we kind of tried to fall down. If you look at the spiders here today, we've had a huge move. And Steve, I know Steve talked about it lately in his webinars, that he wouldn't be surprised to see some backing and filling down to this breakout point. Well, that's kind of what we did today. We did actually pierce that level and break below that range slightly, finished up and closed pretty much right at it. So it's kind of what we've been thinking. Markets can't go up forever, and you have to have some what's called backing and filling. Price can correct in 2 ways. It can do it over price, or it can do it kind of on a sideways action. So the more bullish you are, the more you would like to see this kind of trend and kind of correct, over time versus over price. We are seeing some pullback here, so I know the bulls would prefer this to kind of hold this level right here, which is that prior high breakout. If it takes out today's lows, then you're thinking, oh great, false breakout. Then you get everybody on pins and needles, and the bears start coming in, and we get pushed back down into this range again. So time will tell, but from right now, I don't see any panic. Now, if I pull up the Qs, you're going to see a different story, and let's just do that right now. The technology sector, which could not break out like the rest of them did, and could be leading the other ones back down lower, because if you look at the Qs, got right up 2 days ago, right to that level, that 119.50 level, could not break through, and look what's happened since. Now that is a lot. That's more of a kind of an alarm to me than just backing and filling. That's coming down to like a multi-week low. So, I know more money is going into infrastructure and some of the old school industrial stocks, but I don't know if the other markets can withstand, the Nasdaq going to, if it does, going, and it's not far from it, a multi-month low. So I would keep an eye if you're trading, Dow stocks or, infrastructure, commodities, whatever you're trading. Keep one eye on the Qs, because it will, if it could drag down the rest of the markets. The Dow still holding up pretty well. I mean, it's just look at that. I mean, good Lord. I mean, that finished even. That's, you talk about something that's holding up well. That's incredible. IWM is backing and feeling much like the spiders. But remember, when you're looking at the diamonds, guys, it's 30 stocks. Okay, it's antiquated. What's the word I'm looking for? Index. Antiquated index that really should have been changed years ago. So you're only looking at 30 stocks. And it's funny. I always thought it's funny how they decided to throw Apple into the industrial index.
Well, depends on your definition of industrial, I guess, right?
I guess so. Well, but what's your feeling on that, Jamie? Do you want to add anything? I'm sure you probably have your thoughts on the markets and what they're doing right now.
I pretty much agree with everything, your analysis. It's just, as we're getting some comments in the question section about how strange it is to see it's not quite, well, it is kind of Christmas tree today when you look at the indexes, because you have the Dow closing positive 0.3%. At the same time, the Qs close negative 1.7%, and then you have the SPY down negative 0.4%. So, sector rotation, things like that, everything's kind of connected. So what we saw with the shippers, right? All the insanity that ensued. Did anybody ever really come out and say, hey, this is why the shippers did this, or this? If it's sector rotation into heavy industrial things, those things have to be shipped, right? Baltic Dry Goods Index, that's another thing that is very antiquated. A lot of people a long time ago said the Baltic Dry Goods Trade Index it should be retired because it's worthless. Well, it's had its day in the sun. It goes to sleep most of the time, but when those components start moving and shipping starts doing crazy things, well, that index wakes back up again. But the takeaway here is we're seeing things act in ways that they don't normally do, and
right.
Typically there's a reason for that. But we don't want to get too fixated on that, because all we want to do is go out there every day and try to get our piece. And we can do that. It doesn't matter if the Qs and the Dow are inverse right now or moving in opposite directions. And we'll see some good examples of stocks going up today, from that SPY 50 when the market was just kind of getting sucked down the world, circling the drain all day and heading to lows. Lots of stocks were taking runs to the northern border today. And they were big liquid names from the S&P 500. So interesting. Lots of crazy stuff going on right now, but that's more opportunity for us as traders.
Absolutely, yeah, and that's what I'm saying. I mean, even in a market, that where you feel, if you're just staring at the Qs and you look at them, oh Lord, the market's falling apart. But then I could pull up stocks, that in this sector rotation. I mentioned how I've been getting my brother a few trades lately, but I told him the other day because let's see, and it was Mosaic, and I'm thinking, and he's like, the reason I'm bringing him up because he questions me. He goes, why? And I said, well, it's because this stock is very good chance because a lot of the commodities have been doing very well. The dollar's been strong. That this is going to drag this sector up. And I told him this on this day right here after this day, which it's very funny because now that I look at it, this is very much the pattern that I'm going to show you with the new scan that I have for you this evening. And once again, there's no rhyme or reason. Back old school, if you had weak stocks and the market were selling off, the weak stocks would go down the furthest. It doesn't do that anymore because what Jamie just mentioned, sector rotation. So if you look at Mosaic here and you're looking at the spiders, which I would think it was a component of the spiders, yeah, for sure, and S&P 500, and spiders sold off hard today and a little bit today the prior day, and yet this thing has done nothing but gone up. And the old school thinking is kind of gone, and a lot of it is due to algorithms and high frequency trading. It's just a different game anymore. But the point is, don't think that because the market's going down, everything's going down with it, because it's not the case, and it hasn't been for a long time. All right. Onward, Jamie. Onward. Okay, I think that's enough, guys. But yeah, I think if you're looking, at the spiders, I think you'd like to see it hold, mostly because of this line right here being the prior high. You would like to see it definitely hold, today's lows, if you're bullish. But we are going to move on. And what I'm going to do is let Jamie take over. He's the Holly expert around here, and we're going to let him take over and discuss a little bit about what Holly did today, and also we'll both talk more about his new alert that he built, that's 550. But Jamie, go ahead and it seems like you already did. So.
My pleasure. Can you see me?
I can.
Okay, perfect. Okay, so Holly's going to be short and sweet today, just simply because, well, there just weren't a whole lot of trades, not a whole lot of action from Holly today, which, as Andy said earlier, quite refreshing, and I'll have to agree with him, because when I saw the strategy complement, and of course I took a peek last night to see what was going to be showing up after she was done, and when I saw the strategy panel that we see here, I was like, okay, this means something, because Holly usually comes to the party with 10, 12, 15 strategies, different assortments of longs and shorts, but after the analysis last night, 4 strategies, and here they are, 3 longs and 1 short. And the trade count today was a grand total of 8 trades executed, which is by far and away the lightest trade count Holly's had in quite some time. Don't know exactly how long, but usually a lot more trades than that. So, going to be pretty short and sweet with Holly today. But here's the biggest takeaway from what I deduced from this strategy count when I saw it last night. I'm like, okay, what's this telling me? Okay, tomorrow you better be on your toes, okay, because there's probably going to be some action, but due to the fact that Holly, after all of her analysis, only 4 strategies made the cut, that's telling us that the statistical noise is getting more and more frequent, okay? So, and just to try to convey to everyone the heavy lifting that's going on behind the scenes with Holly, Holly is a culmination of years and years of layer building and back test building and trying to figure out different ways to optimize and look at the markets. So every night she's analyzing. It used to be about 1 million trades, potential trades with all the strategies, but I think it's gotten to be a lot larger. The strategy base is hovering somewhere around 40 to 50 base strategies these days, and so Holly will re-optimize and re-back test all of those strategies after she updates our database with, all the market data from today. So, when we only see 4 make the starting cut, versus 14, then that tells us that something's going on underneath the rug. All right, and so here are all the trades with the trade blotter. Let's see, the first trade was about not quite 30 minutes in, and Holly spit out a few longs, 4 of them right here. And we can see via the risk off column that she got stopped out of 3 of those longs, and we can see that on the exit reason column over here. Now, typically, when the methodology, I should say, that we've been teaching people to embrace with Holly is we'll see her get stopped out of something, all right, and then here's the routine. So, like on data, here's the 5-minute intraday. So Holly she calls a long signal right here, and then promptly gets stopped out. So typically, in this bar right here, or whenever she gets stopped out, I'll come back up here and I'll set a price alert at that same level, because sometimes with Holly, the first occurrence might not be the ticket. A lot of the times on these long trades, the stock will hover around the entry price and eventually go back through it. And sometimes the timing is just a little bit off. So with Holly, the probability is good for the entire day, so sometimes she's just a little early, and so we can have second and third opportunities. But see, the thing about this one, it never came back up, so you would have never been alerted in the first place, all right? There were just none of those animals out there today, when typically there's a bunch of them. You're like, hey, there's usually 10, 12 squirrels in my backyard in winter, fighting over the sparse food, but today there were none. That's kind of strange. Wonder what's up. Is there a cat in the neighborhood? Is there some other predator keeping them away? Well, it's the same thing here. Wow, number one, very little strategies. And then, here I am, I'm seeing these trades get stopped out, and they're never making a second or third incursion, when most of the time on a long strategy, they're doing that. So see, we have to put our ear to the ground and go, okay, since we're used to seeing this type of action with Holly all the time, but today something's different. These things aren't happening. So that is invaluable information, ladies and gentlemen.
Certainly is.
Holly's speaking without speaking, right? So these are the little nuances that we can pick up on. So if none of the long signals are even approaching that entry signal again today, well, of course, let's pretend that it's only this time of the market, right? And we're like, okay, well, what's the SPY doing? Well, it's kind of vacillating here, but, because the day is already over, we could see, we were seeing these events that usually play out, second and third incursions through the entry price. But guess what? No strategies, no second or third incursions. Well, I guess it's because longs aren't working too well today. And then we see, what happens to the market. Those were all slight tells. It's like being at the poker table. And this guy, every time he scratches the corner of his eye, he's got something, right? So It's the same thing. It's repetition. And you hear us talk about this all the time. Half the battle's just showing up, like Wayne Gretzky said, and then by listening and watching to your statistically inclined trading buddy named Holly, not only do we get good trades delivered to us, but it also tells us things. All we have to do is listen and get to know it, right? Yep. So very interesting day in the fact that none of these longs got second, third incursions through that entry price. Right.
That's a very good point, Jamie. It really is. I mean, it's so easy just to say, "Oh, Holly, that's a crap call." But then when you see 4 trades fire off like that, bouncers, we all know has had some really great calls. On support. Remember, it came out just 2 days ago with over an 80% win factor and a 26 profit factor. Winning percentage and then profit factor. So yeah, when you start seeing very solid strategies like that, all failing in a row like that, it's telling you, it's giving you actually a lot of information. It's like, okay, right, I know which way I'm going to go from, until things turn, and sure enough, the market just kept going lower and lower and lower.
Right. So she whispers to you, and you see it, and none of the longs are going back through the entry point again. Not only are they not doing it, they're going the opposite way. So when we look over here, 722, 735, 902, when this short strategy starts firing, you're like, okay, well, if those longs perform so poorly, now we got downward momentum kicking out some plays, 65.1% success rate, and let's see here, CDK. All right, so then we get that short entry here on CDK. Not a bad little call right there. Perfect with the range break as well, which is a pattern that we like to see. And then nothing but net all the way down. Now Holly booked 69-cent profit on that, held the trade the entire duration. And so on downward momentum, we can easily see this guy was designed for a whole time, 60 minutes. So we get in here. What was the price? What was the time on that? Entry time 7:22, 8:23 is the exit. So where'd my little pane go? Yeah, we're out right here. Now a little bit of meat left on the bone for maybe going risk off, or excuse me, risk on. But hey, in the heat of the moment here, you're like, okay, nice elevator ride down. We all love that. Bounce, maybe, depending on what type of trader you are, when we're in this and it's moving down, everybody's all, yay, happy, we're winning. You're up 50 cents. What are you going to do? Well, you can stick with Holly because she is that, statistically inclined trader, 60-minute hold time. When this is going down, we're not really sweating it that much. But just something to think about, and this kind of will tie back into some of the questions that were coming through earlier about, well, is this geared for day trading or is this for swing trading? It's both. Because the first thing is the entry signal. We have to have that, and we want it to be quality. With Holly, we're getting statistical probability on our side. But then again, maybe we ended up holding this all day. Who knows? Everybody's a little bit different. But if we wanted to entertain the idea of this being a swing trade, Andy, what do we have to do? We have to look to the left on the daily.
That's right. Yep.
Okay. And so when we're, at the bottom down here, wicking out, like we can see right here, well, first and foremost, the first little area would have been, well, the stock's already through that little area. We're into this candle here. So, if it kept on plummeting, Andy, we could always mark up these, or we could mark up down here. But that's how we have expectations of how far the thing could go. Now, this chart's not the most conducive, and we're going to look at some later on that are just breaking out at the top with no resistance. I saw a couple today that are pushing through to new lows and that are in voids, and those are the ones that can get real interesting when there's nothing out there for them to get snagged on while they do their thing. So, not going to spend too much time going over these other trades today because, the profit save was doing its job. She books her profits on that one. Had she not done it, it would have turned and burned for, 86 cents the opposite way. This was another really good Holly trade where she only booked a 13-cent profit here because of her profit save functionality, which, just to refresh everybody's memory, was designed and implemented to prevent her from letting a winner turn into a loser. If the time stop hasn't occurred or the profit target or the stop loss had not been hit. And since we've made those changes, we've seen dramatic improvement in her performance chart. No big surprise there. So GLPG, a little bit thinly traded stock, but today it cranked out 160,000 shares. So for somebody doing 100, 500,000 shares, shouldn't really have been a big problem getting filled on this one today. But that's a really nice entry signal right there. And Holly got out when things started getting a little, wicky, and books her whopping 13 cents. But seeing as how this is the stop loss and our entries up here, once we get into this little sideways action here, we always have the opportunity to go, okay, I see Holly's taking her 16 cents, but, I think there might be a little bit more meat left on the bone here, so I might peel out of, if I'm in 200 here, maybe I peel out of 100 when Holly does, give the other 100 back to a flat or a break even, which would have never occurred, and that would have allowed us to capture a great deal more alpha just by implementing some pretty much basic risk management. So even though Holly is showing risk off 23 cents, if you know what to look for, and if you've been coming to these webinars, you do, you could have got a lot more than 23 cents out of those short trades today. That's pretty much it for Holly today, I'd say, Andy.
Yeah, I think you covered it really well, and you hit on the high points there. If you want to drag and briefly talk about that SPY 50 and maybe show some of the stuff that's going through there. And the reason, guys, I wanted to do this because a lot of I just want to let people know that these alerts do not just have to be designed, to find the obscure, stocks, the ones where normally average around 300,000 to 500,000 a day, but you can actually find use it to find mega caps, and Jamie's just kind of going to go through here. We're going to take a look at some of the stocks that have been coming through here recently, so you guys can get an idea of.
Yeah, just to kind of preface this, a couple of weeks ago, I was thinking to myself, because I was talking to some other people that really only have interest in trading stocks that are in the S&P. So I'm like, well, makes a lot of sense. Let me roll my sleeves up here and do a little data mining for myself. So the whole premise about this configuration here that I'm about to show you guys, and when I'm talking about that, I'm just talking about the event here, all right, which is a simple high or trigger of a simple alert or trigger of a new high with some very basic filtering. So don't really want to look at anything until 30 minutes into the open, give everything time to get all the craziness of the open, get some type of pattern established so that we can have something to look at that's not 5 1-minute bars. Just keeping some relatively broad minimum maximum prices here. And really we could dispense with some of these metrics because we're only looking at a list of 50 of the S&P components. But this little guy right here is the kicker. This is the guy that makes, this is the hot sauce that gives this configuration the oomph that is needed, because we're demanding, as these stocks hit a high, that in the last 1 minute period they traded a bare minimum of 3 times the amount of shares as they normally do in a 1 minute period. And that's different for every stock. We track all those baselines. So a minimum of 300, but it could be a lot more. And what I found from about 10 years of watching this data is that if that's happening, it's not just happening in that 1 minute. You're just not catching this one offer that's going, making a price spike with volume. Most of the time, but not all the time, but most of the time, these stocks are maintaining this volume for the duration of the day. In other words, they're going to finish the day trading multiples of the share count as they normally do, and that's what we call real big volume. So if you catch S&P companies doing that, well, even better. So before we get into the trades here and the things that this guy spit out today, I'm going to probably get some questions on this, so let me just try to nip it in the bud now. How did I arrive at the 50 stocks that are in here? Well, I took this configuration and I ran the back test against the entire S&P 500. And then we've got some really cool options. I'll go ahead and run the back test here, which just so everybody can see, but it's not really, I can't say it's not important, but for watching this window and interacting with it, what it's meant to do is go, okay, just taking trades blindly from this window. If I run the back test, and let me just get this going here. Hold on, I think I want to make sure I put it on the right hold time. So we're going to do a couple of different things. We're going to run this one for a 30-minute hold time. While that one's going, we'll just kick it into gear. Just because we also want to see what it looks like if you're, a guy that likes to hold until right before the close, but still be out. Cue up that elevator music, Andy.
Oh, I'm sorry, I'm over here just answering questions. All right.
Back test.
There you go.
Music.
Oh, okay, okay.
Okay, hopefully it's going to be done here in just a couple seconds. Voila. Okay, so with a simple 30-minute hold, we can see there's lots of green everywhere. We've got an average winner, just about 2 times the average loser. More importantly, and I'm pretty sure maybe I just did this for 40-day back test right here. Okay, so here are those 40 days. So obviously, many, many more winning days than losing days, and when the losing days come, yeah, nobody likes them, but they're small, right? So if we were just doing 30-minute holds, we get good results. Also, if we're holding to the close, you can see that our win percentage goes down significantly. So 55.9% versus 65.1%. So obviously, the smaller hold times are more conducive for this stuff right now. But what we're going to see here is not only could we extract good intraday trades from some of these stocks, but they also give us very high-quality candidates to look at on the daily for, you guessed it, position trades, swing trades, whatever term you'd like to use. So we know right off the bat we're drawing from a pool that if we just blindly took everything and got out after 30 minutes, we're winning 65.1% of the time. Remember, the only reason they have 00 on the roulette wheel in Vegas is because it takes your odds from 50-50 to slightly in favor of the house. I can't remember the exact percentage, but Vegas doesn't want you having a 50-50 chance on black or red or even or odd. If they didn't have the 00 on there, you wouldn't see roulette in the casinos anymore, and that's because they understand statistics, right? So if just slightly better than 50% is good, and we're starting with a pool of 65.1%, then folding a little bit of chart reading skill in, we can even take this higher. And keep in mind, 499 trades coming through in a 40-day period, all we need is 1 or 2 a day. Hey, maybe more, but theoretically, 1 or 2 good trades a day is all it takes to feed the bulldog. Okay, so just want to give you guys the high level on the data output from the window itself. And then let's take a look at the action that came out today, keeping in mind that for most of the day, we were just kind of swirling the drain, heading lower, lower, lower. All right, so just keep in mind we get the nice early wake-up call of a 6:30 market open here. So these first two, and of course this is a good time to talk about not chasing, and if you feel comfortable chasing, that's great, more power to you, but if you don't, when you see things like this on the open, okay, remember, we don't start watching this thing until 30 minutes. So 30 minutes comes, right on the button, we pull up UHS. Now, Andy, tell me if I'm crazy or not, but if you saw that pattern, right?
Yep.
And then you look over here, yeah. I just don't care. When I see this many consecutive green bars,
exactly.
I'm going to be like, yeah, okay, yeah, it's just not my cup of tea, right? Because I give 30 minutes so a pattern can emerge. This is not the pattern that I'm looking for. These are not the droids that you're looking for, okay? And of course, sometimes we have to let our windows, for lack of a better description here, find their feet, right? So we pull up UHS. If you feel comfortable chasing things like this, more power to you. Not really my cup of tea. So the first 2 guys are so stretched out, I personally would not have an interest in them. But then we start seeing things like this, okay? Not stretched out, actually came down, kind of coming back up here and doing a thing that I like to see, which is a nice little range break, It's like that guy that used to have what was the artist that painted the nice little, oh, we'll put a nice little tree right there. What was that guy's name with the beard on public access? Well, instead of a nice little tree, we've got a nice little range break right here. All right. So, hey, XOM, also something to consider. Market's feeling kind of downdrafty today. What typically do stocks in the oil industry do when the market is going down? A lot of the times they like to go up. So also factoring that into the equation right here, 88.09, not a bad entry price, culminating with a nice little range break there. So you had about 88.09, you might have had about a 40 cents of worth of alpha potential in there if you would have taken that trade. But a nice liquid stock, and then shortly thereafter, we get hog to come out here, all right? And once again, what a beautiful little pattern, 61.41. We're getting told about it right here. Do I see any crazy extended pattern here? No, I don't. And guess what else I see? Well, let's draw a nice little line here. Nice little range break from an S&P 500 company, and then off to the races. Okay. So XOM looking decent, hog looking decent, LNC, 65.77, which is about right here. Don't worry, Andy. I'm keeping an eye on the clock here because I know you got some more good stuff here. So I'm just going to do a couple of more of these because I think people are going to get the gist here. All right. So once again, LNC follows up HOG, and then we have LUV. Once again, depending on your preferences, more stretched out than I like, but 47.03. You still, if you took this trade, you still had the opportunity to get out for some alpha before the thing rolled over. And so forth and so on all day, okay? If you look at these symbols, and then all of a sudden, at 1:16 Eastern, wow, look at that little guy. TWX at 92.61, probably about right here.
Yeah, beautiful.
And then off to the races. So, lots of good things coming through this window on a day where the market was going down.
Mm-hmm.
So we haven't even really had what I call a decent up day since, we broke back above here. We've had a couple of, once we've got above here, we've had a couple of good days here, these days right here. But ever since we've been up here, it's just been, green, red again. So regardless of what the market does, highly recommend everybody watch this thing because it can feed you some very good trades regardless of the market conditions.
Yep.
So anybody that does not have this window, we will drop it into the chat panel. You will have to email myself or Andy if you want the custom list to attach to it, but we'll post our emails at the end of the webinar. So anybody that wants the list, feel free to email us and we'll send it right over. All right, Mr. Andy.
All right. If you want to just bring it back to me or send it over, I will accept.
I pass the baton.
All right. All right, guys. Yeah, I do have a nice little scan for you guys this evening as well, and I think you will enjoy this. And what I'm going to talk about going into it is the use of ranges, because I know a lot of you guys you can picture an image of a chart in your head, and a lot of times you're going, man, I want to build an alert now because this is what I want. And what I kind of want to get you guys focusing on is to using these ranges, okay, to build the image that you of this chart that you have in your head, because in most cases it can be done because we have so many ranges to choose from. And I'm going to give you an example in what happened today. Just type in, when you go to search, type in position. You're going to see all the different ranges: lifetime, year, 20 position, and 20-day range. and you can, and it's not just using one. You can use a combination of several of them to pretty much build, the chart pattern that you're looking for. And this is the one I'm going to give you an example of. And what happened? I was in a this chat box is in the way. I was in a session today, and a guy told me about a pattern that he actually got from another chat room or something like this of what he was trying to construct, and I got in there with him, and I helped him kind of finish it off, and I got to looking at it. I said, wow, man, we got something pretty decent here, This is great for nightly scans because, for position traders and swing traders, which is more of kind of what I do now, this is the kind of stuff you want to look at for your, when you're doing your nightly scans. And let's just take a look at this. And first of all, it's a top list. Okay, when you build a top list, all you have to do is go into New. Instead of selecting Alert, you just select, Top List. And what a top list does, guys, for those of you who don't know what the software is, it doesn't have any alerts. To have an alert window, you have to have what's called an event. Okay, an event can be a new high, a new low, a 25% pullback from high, something that will trigger, what's called an alert. Well, in a top list, you don't need that. Okay, you don't have that. All you have is filters, and as long as my dog's going crazy in there. As long as you have, the stocks in the universe, as long as they satisfy the filters that you put in your top list, they will appear. And this refreshes every 30 seconds. So what we're going to do here, just take a quick look at this one and this configuration and what you're looking for on this particular one. And it's not complicated at all. Okay, you're basically looking for a price between $1 and $150. The average daily volume has to at least be a minimum of 200,000 shares. Position in range. Anytime you don't see a day or year or a minute in front of that, if it just says range, they're referring to the intraday. Okay, so what we're seeing here, position in range at 75, that means at least has to be 25% from its highs to appear on this top list. Scroll down a little bit further. Position in 5-day range. Say this is where I came in and was helping him because he's wanting to find stuff that's pulling back. So I said, well, why don't we use position in 5-day range and set a max at 25%, which means it has to be 25% from the low end of its 5-day range. So obviously it's pulling back because it's nowhere near its 5-day high there. But at the same time, it's pulling back, but it's still above the 50-day moving average. Okay, so that's key. You don't want stocks that are just collapsing on you. So this is kind of your bullish indicator in this trade. Okay, it's pulling back, 25% close at max, so near its 5-day range. But also remember, it's within 25% of its highs on the day, and I think you're going to really like what this produced. Okay, so we're going to go through here, and we're going to start clicking on a few of these. Let me just move this over here. This is Pier 1, and you're going to see some of these setups in here. Okay, nice. Now remember, what you're developing here is kind of it's a scan. It's for a nightly scan. So what you're developing is what's called a setup bar. Okay, these are not to be. I won't take these trades. I'd really have to like the trade a lot to be taking it during the day, because what you're seeing is kind of a pullback. You want a setup bar, which is going to be a green bar, and it doesn't necessarily have to be green, but it has to be closing, near the top end of its range within 25%. It's kind of similar to the washout bounce, but you don't have to have the washout and all that. Okay, let's take a look at some here. 5. There you go again. Something that's pulling back for 4 days. You have your setup bar right now on a pretty decent volume, I might add. So, what you would do if you're a trader, okay, if it breaks above that high the next day, bingo, you hit it. You set your price alert and save. I must have went off in after hours. I'm not going to focus too much on setting alerts tonight, guys, because we're running out of time. I really kind of wanted to show you some of this. So let me put this up, because I want to show you what. Look at Chris, very nice one there. Stock that's been pretty much in a downtrend for 2 weeks, big volume candle yesterday, red bar. Now you got the little inside day, another decent looking chart. But what we're trying to do here, guys, is create, opportunity and create a good risk-reward, situation where you can take a trade if it breaks through this high the next day, and then, boy, you're kind of anytime you take a trade like this because you're buying it in a downtrend, I like to call that good risk-reward because your downside, is basically the low of this bar right here. So if you do get a head fake, it breaks through and comes right back down, you're out right here. But your upside has tremendous, upside reward to it. And just to kind of give you an idea, guys, I was going back and looking at some of these, and I'm going to change time frames here and go to historical data. And I'm going to go back to the 29th. And I don't know why it says 4:53 in there. I don't want that. I want 3 o'clock. This is how you go and do your homework. If you want to see prior days, you go to historical date, and you click OK. And there it is. And let's look at some of these that came through. Now remember, this was the close. I'm coming in on the 29th. I'm doing my homework. This is the close on the 29th. I'm going to show you some of these, what happened the next day. This is OIS. This is the 29th.
Nice.
Let's take a look at the BBG. Now, some of these, this is you're not going to see this all the time, guys. A lot of these were oil stocks that had a big move. But look at this. There's another one. It's a very bullish pattern, but TS. Yeah, look at that. That's the 29th. So this was a day where you really had a lot of oil stocks, but I tell you what, if you had this alert and you're looking at them and you have your price alert set and you see, look at that breakout right there. Isn't that beautiful?
Beautiful.
Right. If you're using this and you're doing your homework, okay, you're setting your alert right here. Of course, it goes off right at the bell the next morning, but hey, you're alerted to a major breakout there above this area. So, and you guys, I haven't done much of this. Okay, this one didn't work. Okay, there you go. It didn't work. Okay, you're out. Okay, darn. All right, you lost a little bit on that one. You're going to have losers, but look at the potential you had on the ones that worked. DRQ. Let's do what this one did. There you go again. Boom, boom. So anyway, guys, this is a nice alert. There's no custom formula or anything like that. It's pretty basic. I like to use the change in 5 days, 10 days, and 20 days on a lot of my alerts because that way when I see them, I want to avoid the ones where you have red all the way across where they're just down for, all these days. But anyway, we're running out of time here. I do want to bring Scott in, but what I'm going to do, guys, is drop this in the window for you. Don't forget to go in and make sure your time frame is on live during market hours or always live. I like to use live during market hours. That way it freezes at the close at the end of the day, so you can kind of do your homework. And do not forget to go in here and change. Yeah, you don't need to change the date. All right, guys. So I'm going to copy and paste this in there for you. You guys take a look at it and let me know what you think.
Hey, and by the way,
please, if any of you guys, go ahead.
I was just going to say I was able to copy and paste that list into the chat. So I put the cloud link for the one window, and everybody can just highlight and copy that list. No problemo.
Good idea. And right now, I'll just go ahead and label this so you will not get confused. I call it just pullback. I'm just going to put pullback 50 in here, guys, and then I'm going to paste it in there for you. And that way you guys can copy this and have it to take a look at. And if any of you guys play around with it and work with some of the filters and fine-tune it even more, I didn't have a whole lot of time to work on it than what I did in my session today with this guy, but it's a really nicely little study nightly scan that you can pull up and look for opportunity the next day.
Absolutely, and Jeff was making the comment that sometimes these things will be trading in after hours and they'll automatically trigger. And, unfortunately, I haven't really found a workaround for that, Andy, unless it comes back down below the price, So
yep.
In those cases, you just have to manually, watch those on the next open.
You really do, and it's just that's the key about this thing. Like I said, those are setup bars. So this is I don't look at these to rush in and make trades that day because you really need to make sure there's going to be some follow through.
That is true.
All right, Scott, I think we're ready for you. And by the way, Kyle, you are close there. I'm actually from Texas. And Kyle made a comment. I'm from Arkansas, Tennessee.
We're representing the South.
There you go. There you go. Yeah, Jamie's
Texas.
a Texan. He's a fellow Texan.
I'm up here, in the land of well, it's not the land of enchantment. It's the land of, fruits and nuts, right? California, out here on the coast.
That's right. That's right. All right, Scotty, if you want to come in and tell them these guys what they can get this for.
The land of green products. Yeah, go.
Yes, and fruits and nuts and green products.
Trade-ideas.com/price is where to find out about the pricing tiers. And you can use the code ADVANTAGE this month, new code for December. All caps, like you see it. That lets you get into Trade Ideas Premium for 15% off, either your first month or year. Same deal for Standard, except 10% off of that. Standard and Premium both include a lot of great stuff, including real-time data and a full hour of one-on-one training. So as soon as you sign up for either one, go to the support section and follow the clues to the training sign up. And you can pick your preferred time and date with Jamie, Andy, or Steve, and get that going. We also are offering a la carte training. If you've already used your free hour of training and you want more training, we now have that available. So same location. Once you find that, you can go ahead and sign up for that. It's $99 an hour, so it's still a good deal. But that's the value of that free training. So essentially, if you sign up for Trade Ideas Standard and that first month and opt for the free hour of training, you basically, just the training itself is paid for that month. Then upgrade to Premium. That is the recommended way to try out the trial. And the Premium brings you the full access to the AI, Holly, and our backtesting module. So you get unlimited event-based backtesting. You can try out your own strategies if Holly is not enough for you. And then also price alerts windows, other advanced windows, all that good stuff, all the new technology is found in Premium. Both are great. Any questions about it, just email info@trade-ideas.com. Get all that info. You can also download a handout. Click on the handouts panel in your GoToWebinar interface, a little plus sign next to that, and you can get this information as well as the contact info. So, you can follow our Steve Gomez at Today Trader. You can follow Dan Merkin at Trade Ideas 1. You can follow Jamie Hodge at QuantBot. Those are our Twitter guys. We've got some other Twitter addresses too if you kind of hunt around. A bunch of us on there. Trade Ideas Pro on Facebook is a place to like us on Facebook. We post some different content there, so go ahead and do that. Info@trade-ideas.com is the best place to send technical questions or help questions. That goes into our help desk software and gets routed to the appropriate team member. The 619 phone number is great if you need assistance with your subscription plan or billing. But again, info@trade-ideas.com, best place to send questions, or you can reach out directly. Andy is Andy at, Jamie Hodge is jhodge at, Dan Merkin is Dan at. I think you can kind of figure that out. Pretty easy to get a hold of us. Thanks everyone for attending. You'll get a link to the replay in an email tomorrow, or you can just find it on the playlist for webinars later tonight or tomorrow morning. Thanks, Jamie and Andy. Y'all have a good.
Thanks everybody.
Yep.